Hi everyone, my name is Busari Abiodun. Welcome to my channel. In this video, I'm going to introduce you to bookkeeping and accounting. Before we look into what bookkeeping and accounting is, let's look at the origin of bookkeeping and accounting. The origin of bookkeeping and accounting can be traced down to the ancient Mesopotamia, Egyptian, and Babylonian at about 2000 BC. This was based on the discovery of the archaeologist who found a record of tax being inscribed on clay and burned to be hardened by the ancient Mesopotamian. But the drive for more accurate method of accounting brought about writing, counting, and arithmetic. That's the reason why researchers believe that writing and accounting came into existence almost at the same time. Now, let's look at what bookkeeping is. Bookkeeping can be described as a systematic recording of business transactions on a daily basis. The officer that is in charge of this recording is called the bookkeeper, while the book in which the business transactions are recorded on a daily basis is called the day book. Let's look at accounting. The modern day accounting can be traced back to the Reverend Luca Paciolo in 1494, who propounded the double entry principle. The principle states that for every debit entry, there must be a corresponding credit entry, and for every credit entry, there must be a corresponding debit entry. And that principle that was propounded by Reverend Lucas Paciolo till today remain the basis of accounting. That is the reason why it is generally believed that Reverend Luca Paciolo is the father of accounting. Now, what is accounting? Accounting can be defined as an art of recording, classifying, summarizing, analyzing, interpreting, and communicating financial data to assist users in decision making. The person who carry out this process of recording, classifying, summarizing, analyzing, interpreting, and communicating of financial data is called an accountant. Now, for a good accounting system, there are some qualities, there are some characteristics that it has to possess. That takes us to the characteristics of good accounting information. There are many characteristics of good accounting information, but the major ones among them are: 1. Objectivity, 2. Relevance, 3. Timeliness, 4. Clarity, 5. Accuracy, 6. Comparability. The last one I will be discussing is neutrality. Let's take these objectives one after the other. Objectivity. These qualities means that every information in a financial statement must be able to be traced down to source document. What are the source documents? This comprises of the receipt, invoice, debit note, credit note, bank statement. That is, each of the information in a financial statement must have a document that proves the value that appears in the statement. Relevance. These qualities means that every information to be appear in a financial statement must be relevant to assist the user in decision making. There are some minor information that does not relevant, that cannot influence the decision making, are not expected to be appear in the financial statement. Timeliness. That is, a good financial statement must be provided at a speculated time, either quarterly or yearly. The timing must be maintained. It must meet up the need of the users. That's what timeliness is talking about. That is, a good financial statement should be made available at the appropriate time. As you all know, for a corporate organization, they usually have annual general meeting, which is AGM, every year. So a good financial information is expected to be ready prior to that time. Clarity. This quality means that every information in a financial statement must not be misleading, must be free of ambiguity. Any misleading information must not appear in a financial statement. A good financial statement must be prepared in a sense that the user will be able to read and understand without engaging the service of the third party. Accuracy. Accuracy is also one of the qualities of good financial statement. That is, the value have to be accurate with what is in line in the source document. The method of preparing the account must be accurate. Whatever method that is being chosen, either in depreciation, it has to be accurate. It has to be consistent over years. Comparability. A good accounting information must be easy to be compared with the previous year's accounting information. It must be easy to be compared with other accounting information prepared by other organizations who are in the same line of business with the organization. That's what comparability is talking about. Neutrality. The qualities of neutrality means that a good financial statement must be neutral, must be free from personal opinion of the preparer. The preparer must not be biased. It has to present the true and fair value of the organization in the financial statement. That is, any act of partiality, biasment must not appear in a good financial statement. So those are the qualities of good financial information. Now, let me take you down to what I call movement of accounting information. As you see from the chart, that is the way in which financial transactions move from one stage to another. As you all know, when we are talking about buying and selling, that's the beginning of the business. Business sells to customers and they also buy from suppliers. So any buying and selling that has to do with cash, receipt is issued. So when customer buy in cash, business issue receipt. When they purchase in cash from supplier, they receive receipt from supplier. For credit transaction, invoice are issued to contain the detailed information of those goods being bought. So all this receipt, invoice, the debit note, credit note, all the bank statement received from bank, all those documents are called source documents. It is from this document that bookkeeper record the transaction into his book. The book in which those records are recorded is called the day book. At the end of the period, either end of the day or end of the week, the total of each of the transactions in the day book will be calculated and be posted to their relevant account in line with the double entry principle which was propounded by Reverend Lucas Pasiolo. The account in which they are being transferred to is what you call a ledger. So the ledger is believed to be the principal book of account because it is in the ledger that they will know the balance for each of the accounts. So the balance for each of the account will now be transferred to where you call a trial balance. If a ledger is having a debit balance, it will be transferred to the debit side of the trial balance. If a ledger is having a credit balance, it will be transferred to the credit side of a trial balance. So after preparing the trial balance, it is from the trial balance that the final account will be prepared. What is final account? This comprises of the trading profit and loss account, as it was called before, but now it is called trading profit or loss account. And the other one, which is what? Balance sheet. The balance sheet is now called statement of financial position. Why do you have changes in name? This is because of the IFRS principle. That is the name being given to IFRS. As time goes on, when you follow through, we know the reason why all these names, we have changes in names and on what basis accounting informations are being prepared. So thank you very much for watching this video. Don't forget to subscribe to my channel for more details, for more information about this presentation. You